So lay out what you're seeing right now. Why are you bullish?
Yeah, so it's interesting. This has kind of been a continuous theme, Seema, in the derivatives market, which is this lack of hedging, this absence of demand for downside protection, and then look, in some pockets, active bullishness. So, when we kind of sweep across different sectors, different liquid ETFs, we're seeing people start to buy upside in that long duration tech in the Qs. We've also seen it in China, and then we're starting to see it revert back into energy as well. So, things are changing because the derivatives market tends to be more tactical. And I do think investors are starting to pick their spots in some places.
What did the derivatives market tell you about the outperformance in Chinese tech this month? Can it last?
It's interesting because we are starting to see some of those positions monetized. But I think what happened is when you look at the COVID lockdowns, when you looked at, just the issues with the supply chain, sentiment had gotten so bearish that tactically, it did make sense. If you look at where there actually could be stimulus and growth in the world if a lockdown did end and things did recover, you were just talking about the Shanghai Disneyland reopening, where do you really see those drivers? And so that's why I think you saw FXI, ASHR, KWEB, these are all China-related ETFs. Even BABA on the single stock side, you're seeing a lot of calls and call spreads activity being bought in the options market.
Morgan Stanley came out with a pretty bearish note on Carnival, a name that I follow really closely, raising concerns broadly about the American consumer entering this potential recession, what it could mean, for spending going in the next couple months. How would you be trading consumer-facing stocks right now, Amy?
One thing we've been talking about a lot is really the next big meaningful catalyst, not just for derivatives overall, is going to be earnings and when they kick off in earnest. And there's been this interesting dichotomy, Seema, because, you haven't seen that much hedging. There's been this lack of demand we've been talking about on the index and ETF side, but you are starting to see that pick up on the individual stock side. I only think that gets bigger and bigger as we sweep into earnings season. And there have been two interesting characteristics for the last two earnings seasons, which is the move that options were implying heading into earnings season were way smaller than what actually happened. So stocks have been really blowing through the moves that were implied. I think that probably happens in a sector like XLY, consumer discretionary, because, we need to know about the state of the consumer. And if it disappoints the downside, you may get another Walmart Target situation.
Sticking with the consumer, Netflix is the worst performing stock right now in the S&P 500, Amy, for the year. It's down 70%. Could, over time, this stock be considered a value play?
Yeah, it's a great question. And I think, frankly, the Russell 1000 already considers it a value play. I just got moved into that index,
right?
Which, if you just kind of step back and think about it, is amazing because this is one of our, big Fangman names that we always watched. And now it's a value stock along with Facebook. And so, what I think happens is for investors who have to reweight and rejigger because they are value players, you'll probably see inflows into that name. And I do think, for appropriate portfolios, it would be interesting to sell puts to commit to owning downside. I'm sorry, to owning the position at lower levels if you believe those valuations to be attractive.
No, that's fair. What's your year-end target for the S&P, Amy?
That is the purview of my colleague, Lori Calvasina, not myself. And I have to tell you that she has a way harder job than I do. So I'll leave that to her.
Okay. Lastly, energy. Would you be a buyer or seller here?
Our commodity strategist, Halima Croft and Mike Tran, they've been talking about kind of the fundamental tightness that still remains in the market. And again, we're seeing that inflection point happen in derivatives. So I would still say there's probably likely still upside to energy, even given what's recently happened. And again, you're seeing that happen in the derivatives market with calls and call spreads starting to be purchased again.